Welcome to Richard Suttmeyer's 4 and 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip tracks the U.S. Treasury yield curve and the yield on the 30-year bond. The 30-year minus 2-year yield reached a new wide of 275.9 basis points last Thursday, wider than my annual resistance at 270.6. The coupon curve ended Tuesday at 261.6. with this week's resistance at 283.5. The daily chart for the 30-year bond yield shows risk to the 200-day simple moving average at 4.774. A close this week cheaper than the 5-week modified moving average at 4.448 keeps the weekly chart profile negative with risk to higher yields. The FOMC lowered the federal funds rate by 125 basis points in January to 3%, which puts upward pressure on bond yields given the increased risk of global inflation. The yield on the 30-year is up 20 basis points year-to-date and up 55 basis points since January 22nd when the FOMC made that surprise 75 basis point rate cut. My second blip profiles COMEX gold, NYMEX crude oil, and the euro. COMEX gold reached its all-time high of 941.8 on the first day of February. Monthly quarterly supports are 897.6 and 856.5, with daily and weekly resistances at 933.5 and 975.2. Semi-annual support lags at 776.5. NYMEX crude oil traded above $100 per barrel on Tuesday, which I view as another test of my semi-annual resistance at 99.83. My semi-annual and quarterly pivots are 88.04 and 88.85. The dollar is not the weak currency. My semi-annual annual supports for the euro are 1.4361 and 1.4174, with weekly, quarterly, and monthly resistances at 1.5015, 1.5066, and 1.5104. My third blip profiles the daily charts for the Dow Industrials and the Dow Transports. For the Dow, weekly supports are 11,950 and 11,594, with a daily pivot at 12,465 and my annual pivot at 12,670. The downside for 2008 is my annual support at 10,747. For the Dow Transports, weekly, monthly, and annual supports are 43.90, 43.71, 42.67, with daily resistance at 47.62 and the 200-day simple moving average at 48.59. My fourth blip profiles the home builders and regional banks. The housing and banking indices have gone from oversold to overbought and now have declining momentum on their daily charts. The residential housing sector index, HGX, is back below its 50-day simple moving average at 138.86 after setting a year-to-date range of 117.41 to 157.57. The regional banking index, BKX, represents 24 regional banks, including Bank of America, Citigroup, JP Morgan, and Wachovia, 4 of the top 5 banks relative to exposures to credit derivatives. The BKX is below its 50-day simple moving average at 88.09 after setting a year-to-date range of 74.84 to 96.49. Housing starts for January are due to report at 8:30 a.m. this morning, and this reading could be under a 1 million unit annual pace. This has adverse effects on both the home builders and the regional banks. Send your comments and questions to support@rightsideadvisors.com. That's today's 4 and 4. Enjoy your day.